it's a it's a very interesting story. I can almost write a book about it because it was very hard. Although our ETF is a very simple ETF, the fact that there is Bitcoin in the name, it took like I would say 5 to 10 times more time than if it was a simple equities ETF. So today it's listed in Paris, Milan, Amsterdam, Frankfurt. And we're also planning to list it in Switzerland and in the UK in the next month. The same way as we have cycles on Bitcoin, you're going to see cycles on Bitcoin Treasury companies. So the real differentiator is not like whether it's a hype or not. Contrary to the .com era, you're building on top of an asset that is going to infinity. So the real risk basically is an execution risk. So the main thing you should look at while looking at these private Bitcoin companies is their capacity of executing the plan and the team's commitment to executing it and their knowledge to do it. The problem is Europe that it is much slower to change. So whether the trend is pro or anti-Bitcoin, because you have like 26 countries and their parliaments and their local elections and so on. The whole bureaucratic aspect of Europe makes it much more prone for CBDCs than for Bitcoin. You cannot study Bitcoin and not be a Bitcoiner. The main thing is that being in financial markets, when you start studying Bitcoin, you look at financial markets in a completely different manner. Like, what is this money I'm trading and what are these valuations that I'm paying and why is this trading at this multiple and why is this trading at that multiple? So it's a good fundamental lesson for anybody working in finance to study Bitcoin.
Hello and welcome back to Bitcoin for Professionals. Today we have a special guest, Jad Comair, founder and CEO of Melanion Capital. Jad, how are you doing today?
Good, and you?
Doing good. Some really positive news that we'll get into in a little bit later, but great to have you on the show. It's been a while I haven't done the show. I had a newborn, and so my hands have been really tied, but I'm excited to be back. And I'm excited.
Congratulations.
Thank you. I'm excited to have you as my first comeback guest. But Jad, let's jump straight into it. So, Jad Comair, tell us a little bit about you, your focus right now, your journey professionally. I'd love to know more about that.
Okay, so basically I'm French Lebanese, born and raised in Lebanon, then moved to study and work in France. I spent my professional career, in finance, where I was a trader during 10 years at Société Générale in Paris. And then I left to start Melanion Capital, which is a hedge fund specialized in derivatives. And a couple of years ago, I decided to expand to Bitcoin, and we launched the first Bitcoin equities ETF in Europe.
Amazing. Yeah, we'll get to that part. I want to know more about that and your experience with that. So you're from Lebanon. Most of the world sadly knows Lebanon for two things. Well, one of them is a good thing. It's the food and the nightlife. The other is hyperinflation and the total collapse of the economy. How did, being a Lebanese and being raised there before transitioning, how did it shape your views on money, risk, and in general finance?
Yeah, actually, it's I think my Lebanese background helped me a lot into first discovering Bitcoin and then adopting it and see its full potential. My main when I discovered Bitcoin personally, it was like 2013, and I had spent maybe 10 years or so between Paris and Lebanon, going back and forth because my parents live there. And every time I had to change my euros to dollars to Lebanese pounds and back and forth. And I was seeing all these banks, credit card issuers, financial intermediaries luring on users like me. And when I saw Bitcoin, that was my first reaction. It would be great if there was one global currency that is accepted everywhere, and that people can use it to pay every time they travel. So I saw it initially as a medium of exchange, not as a store of value. And as I dug in further into it, I discovered the store of value part. And for the store of value, I had to dig into my financial experience to be able to understand why it's a good store of value, and which made me like a full Bitcoiner. And which made me initiate the shift in Melanion Capital from a traditional financial hedge fund to a Bitcoin-focused company, where we issued the first Bitcoin equities ETF in Europe. And today we just announced, coincidentally, that we're also becoming a Bitcoin Treasury company.
That's it's quite the journey and quite the shift. I mean, in a lot of places in the world, Bitcoin, you have to go find it. For countries such as Lebanon, people who are from there, it seems that, you quickly understand the value of it just because of the hyperinflating currency and, the Ponzi-like banking structure. That's amazing. And congratulations on, working towards a Bitcoin treasury company. So maybe you can tell us a little bit about, before we dive into that part, the Bitcoin ETF that you put together in Europe. How was your experience there? I mean, the United States with the new Trump administration has been extremely pro crypto and, pro Bitcoin. Europe has been extremely pro CBDCs, digital IDs. I mean, they've chosen a very different path. They say the United States innovates, China copies, and Europe regulates. So maybe you can tell me a little bit about your experience with that. How did that come about? How did you work at Melanion to get buy-in from your partners and your whole organization? I'd love to hear that story.
It's a it's a very interesting story. I can almost write a book about it because it was very hard. Although our ETF is a very simple ETF, like if you think about it, we're just trading equities, listed equities. So the fact that there is Bitcoin in the name, just as simple as that, like it's an equity ETF. When it comes to everything else, that just Bitcoin in the name, it made it like 10 times, 100 times more difficult than just any other ETF. First of all, you need to understand that in Europe, contrary to the US, until recently, you cannot have a Bitcoin ETF, like a direct an ETF that invests directly in Bitcoin. You have other products, other notes, but as an ETF, the regulation doesn't allow you to do it. So what we thought about is, because we wanted to bring Bitcoin to Europe, and Bitcoin per se was not eligible in an ETF wrapper, we thought about how to build a basket of companies that have the price performance most sensitive to the price of Bitcoin. So our ETF basically ranks all the companies in the world based on their beta to Bitcoin. Then we filter out the companies that are not in Bitcoin or in blockchain or in crypto or wherever other industries, and then we weight them according to their beta. So the more sensitive you are to Bitcoin, the higher your weight is in our ETF. And so that's how we were able to launch it. It took like I would say 5 to 10 times more time than if it was a simple equities ETF. We applied for a license for the ETF almost everywhere in Europe, and we were like declined just because the word Bitcoin was in the ETF everywhere except in France, where we were able to push our regulator to allow us to create it. And since we are facing the second barrier, I would say, is the referencing, because once the ETF is listed, you need to have banks, insurance companies, retail brokers, and so on, giving access to their customer to these ETFs. So this is also like that's our current battle and our daily battle. We also managed to list it a little bit everywhere in Europe. So today it's listed in Paris, Milan, Amsterdam, and Frankfurt. So it is growing all over Europe, and we are also planning to list it in Switzerland and in the UK in the next months.
Amazing. Well, good luck with that. I mean, it's fascinating to me that, having 3 letters in the name in your filing can be so detrimental to your filing. It's really the opposite of how, the UAE, for example, has taken as an approach for regulating digital assets. They have a clear-cut regulatory framework, because I worked in Canada and the regulator was like that. If like they see something that scares them, they won't even do the due diligence to read. It could be the most interesting, the best product ever to exist, the most safe product, but if the name says something they don't agree with, they just reject it. But in the UAE, for example, and in Bahrain and a lot of the nascent Middle Eastern countries, the regulator is very approachable and they're very open to understanding kind of what you want to put forward. They want to be at the forefront of innovation. They'd rather take the risk and be at the front than, be conservative and be at the back. But that's amazing. And at the firm level, I mean, must have taken a lot of morale, a lot of conviction to have everyone go through that. So is your firm, would you say, Bitcoin friendly? Are your staff knowledgeable about Bitcoin? Do they understand the value proposition and the mission? I'm just curious.
Let me first comment on the UAE, and honestly, I cannot but agree with what you said. Like what they have done in the whole crypto space is really amazing, and it's like completely opposite to everything we have seen in Europe, but also in the US. I mean, before the Trump administration, the US was very resistant to all these technologies, and now we saw a shift. But early on, the UAE have been a tremendous player, and they seized the opportunity out there, and now Dubai and Abu Dhabi and the likes are the place to be when you want to launch a crypto project. So that's definitely was a game changer for the region on this industry per se. Then you have the European part where early on they started regulating. So like you were saying, the Europeans are very good at regulating, but at least it gave some clarity, which you couldn't have in the US, for example. So when the regulation was there and before Trump arrived, Europe had still like a place to be, and there was a lot of talks about companies wanting to establish in Europe thanks to regulatory clarity. But now with Trump in and his whole administration giving this clarity, I think Europe is, between the UAE and the US that are so advanced in terms of regulation and positioning pro-business compared to Europe, I think this is where the trend is going to continue in the next years. When it comes to my team, to answer your second question, is are there Bitcoiners? Yes, of course. I mean, you cannot study Bitcoin and not be a Bitcoiner. So most people who are not Bitcoiners didn't spend the time to study it. I have like maybe 1 or 2 examples out of thousands that studied Bitcoin and didn't adopt it or didn't get convinced immediately. And the main thing is that being in financial markets, when you start studying Bitcoin, you look at financial markets in a completely different manner. So you become like, what is this money that I'm trading, and what are these valuations that I'm paying, and why is this trading at this multiple, and why is this trading at that multiple? So it's a good fundamental lesson for anybody working in finance to study Bitcoin.
100%. I couldn't agree more. And one thing on your note. So I need to ask you this because in the US, every administration, so every 4 years, there's a risk of regulatory change. So under the Biden administration, we saw the worst environment for Bitcoin and crypto. Now we have Trump. It's the exact opposite, 180 degrees. Who's to say the next administration that comes in doesn't just revert and pushes for a central bank digital currency? In Europe, is it the same? Because it seems to me, because it's a broader ecosystem, it is harder to revamp regulation. Correct me if I'm mistaken, because it takes so long to put in the regulation that I would imagine it's extremely difficult to pull it out and reverse course. So if we see the approvals happening, does that reduce regulatory risk for Bitcoin and digital assets in Europe?
The problem is Europe that it is much slower to change. So whether the trend is pro or anti-Bitcoin, it takes much slower time because you have like 26 countries and their parliaments and their local elections and so on. So there is a dynamic that is much slower. For example, before the last Trump election, when the Biden administration was here, the whole European stance was aligned completely with Biden's. But when Trump came and ignited this massive change, we haven't seen anything similar going on in Europe, but we have seen some politicians saying to themselves, okay, starting to talk about the idea of maybe we can put Bitcoin here and there and allow it to exist and so on. But the whole bureaucratic aspect of Europe makes it much more prone for CBDCs and for Bitcoin. That's what we saw also in China, where Bitcoin is banned. So Bitcoin in Europe is not banned, but everything is done to push the CBDC narrative. And in the coming months, the ECB is launching their digital euro. And they want to push this agenda rather than the Bitcoin agenda and decentralization and so on.
Yeah, that's terrifying. I mean, 1984 Orwell style governance. What are your personal views on the CBDCs? I mean, Christine Lagarde and her colleagues basically look at China as a great example of what they've done with CBDCs, which is kind of ironic because Europe stands for democracy and human rights versus, how can a tool being used by a communist nation benefit, Europe, which is always trying to protect supposedly liberties. But I'd love to get your take. How do you perceive the world under a CBDC? What comes next? People are saying instantly right after that, we're going to see digital IDs. But I'm just curious to get your take on that because you live there, you experience Europe all the time.
Yeah, I mean, it's... I used to be shocked, but now I'm like just accepting the fact and and resignating myself to the idea that slowly but surely Europe is becoming a communist country, and all this is and there's a big masquerade behind like liberties and freedom of speech, and you feel like on the headlines they claim a lot of virtuous principles, but in practice they want to regulate, police, supervise, and control their citizens. And the digital euro is one piece on top of many that they are putting in place to control. And the thing about regulation, when it comes to putting all the so when you put in regulation and when you are a regulation-friendly country, CBDC is a perfect fit because you can enforce all kinds of regulations directly at the pocket of your citizen. So although it's not called communism, it is excess regulation, which funnily and oddly, you don't have like a measure of how much is good, how much is bad. The amount of regulation you can put when you're a regulator is unlimited. You cannot say no, because every regulation you're putting is goodly intentional. The example I like to give is, what is the speed limit that would be perfect in Paris? And the answer is 0, because this is where you minimize the incidents, and no more deaths and no more injuries on the roads. So every decrease of speed that you're inputting is well intentioned. I want to reduce deaths and I want to reduce injuries on the road, and that's how you end up with 0. That's how you end up in a Norwegian scenario, and that's what's happening in Europe. I see nothing that's gonna stop it. Yeah. So us Bitcoiners are like screaming to the scandal, but at the end of the day, we cannot do anything, because the forces are so strong and the public opinion is so strong. Like, why wouldn't you reduce deaths? Why wouldn't you reduce? So they present the digital euro as a very efficient, a very nice way to bank everybody and to have smooth payments and so on. But nobody talks about, or at least publicly, about how could bad actors use it. And if you look at all the posts of the ECB, every time they talk about the digital euro, there are like hundreds of people saying, we don't want it, we don't want the digital euro. But and it's been like, and I watch them every time. It's like funny to read them. But they still pursue it. They have like these committees of self-nominated group think tanks, and they just pat each other on their shoulders and they move forward without any contact with reality or with what's happening and what are the needs. And oddly, we already have a digital euro, and we have also the technology to install it, because the digital euro, as they are building it, is going to be centralized, obviously, and is going to be limited to Europeans. You will not be able to have a digital euro if you're not a European. So it's very like closed. But today in Europe, you have a very efficient tool to send money in euro all across Europe to other Europeans, which is the bank account and the SEPA technology. Like, I can wire funds in Europe instantly through the SEPA technology. So instead of using even the SEPA technology as a digital euro backbone and save billions of dollars in development, they are building something completely new that will cost billions, and that is already out there. If I have your IBAN now, I can send you instantly unlimited amount of money to your bank account in Europe. So I don't need this digital euro. And you cannot have a digital euro if you don't have a bank account. So you need to go to the bank to get the digital euro. So the whole thing just doesn't make sense, but they're still moving on it, just to showcase at the end that they have a better alternative than Bitcoin. Because all this effort and all this work is based on fighting Bitcoin and finding an alternative to a global decentralized monetary network that can compete with them. So
yeah, they're just too bureaucratic in Europe, but it's just fascinating. I mean, you look at countries like the UK, there was a 1 million, 2 million person march to try to regain freedom of speech. I mean, freedom of speech, a lot of other liberties are not as prevalent in Europe as they are in the US. The culture is extremely different. The people are more docile. Similar to Canada. I mean, I come from Canada. Canada's pretty much the North American version of Europe. With bureaucracies, rules, and regulations. And they have something similar to your SEPA. It's called Interac, where you can send money to anyone at any time just using your app. And I don't think they're exploring CBDCs. If they are, they're behind. But yeah, it's funny that they hate the I mean, what I hope is that, in Africa, in Nigeria, the government pushed central bank digital currencies with the e-naira. And there was a rebellion. The whole people transitioned and pushed harder towards Bitcoin because the difference is in Nigeria, the government is similar to the Lebanese government. It is corrupt and it is constantly robbing from people. The people quickly realized that this digital currency is just going to make that easier for them to do. So they held on to their Bitcoin and they kept transacting with Bitcoin. In Europe, I guess it's not the same because people are still under the illusion that central banking and the government are working in the interest of the people. Do you agree with that? Or do you think we might see some form of revolt? Because across Europe, France, the UK, Germany, we're seeing more, a lack of trust in institutions and government entities because living standards have become more difficult. Life has become more expensive. What are your thoughts on that? Do you think we'll see will it be adopted is what I'm asking.
I think it needs to crash before it gets adopted. Again, from my Lebanese experience, although today, if you look at France's debt to GDP level, is getting close to where Lebanon was when it went bust. And when I was in Lebanon, telling my friends and family, take your money out of Lebanon because it's not sustainable, this debt to GDP. They weren't taking me seriously. Although, I work in finance and I know what I'm talking about, but the trust in the existing system is the system is bigger than a voice because there are so many politicians, central bankers, and there's this guy who comes and say, or this group of guys and that come and say, hold on, this whole thing is gonna fall to crumble. What do they know that all these guys working? The ECB has 500 PhDs working. The Banque de France has thousands of employees and so on. Bercy, the French ministry, has also thousands. What does this guy know that all these guys don't? And it's the same pattern that repeats all over the ages, I would say, not only now. So you need the system to crumble to have a real full adoption and full understanding. So Nigeria has one of the highest Bitcoin penetration rate because they have a crumbling system. It's unfortunate, ideally people, I would want it to be a smoother transition and done in an orderly manner, but history has showed that it's never the case. It's always through shocks and so if you look at the debt to GDP, it's unsustainable. And even if you look at the political landscape, you have a rise of communism all across Europe. Rise of far-right movements that are economically communist also. You have more and more communism, whether on the left or on the right ideology when it comes to economies that are rising, which never tackles the deficit. They tackle it by increasing taxes rather than reducing expenses. And this will lead to a slow but sure default of the countries. So, and this is where we'll see a big Bitcoin adoption. But until then, they see it more as a store of value. And Europeans are not very good investors because they have in France, for example, you have your pension paid by the government, so you're not incentivized to save, to invest. So there's a much smaller culture of investing in Europe compared to any other countries, actually, or any other continents, because they have always believed in the government paying their pensions. So most of if you look at any if you look at the biggest investment conferences in France, for example, I attended several ones to promote our Bitcoin ETFs. And you see the floor is 90% real estate investments and 10% equities and other type of investment. So they have their pensions fixed, and their second best investment is is land and buildings and real estate in general.
Wow.
And the pocket for risky assets is very, very small. So Bitcoin is entering there, but it's entering a pocket that is already very small.
That's very interesting. Wow. Yeah. I mean, that cultural point is eye-awakening. You forget. I mean, in Canada and the US, investing in equities is just second nature. People start doing it when they're 18 and they can open up their first brokerage account. They speculate. They have fun. Everyone talks about tickers. In Europe, I guess less. So that's fascinating. Before we jump into the most interesting aspect of this conversation, there's one thing on LinkedIn that you put together, your series, Why I Became a Bitcoiner. Earlier, you mentioned you should write a book about your experience with the ETF in Europe. It seems like you have a knack for writing and you enjoy writing. Can you tell us a little bit about this series? And, you know, it takes a lot, someone from TradFi to go on, of all platforms, LinkedIn, and tell all their connections and all their network that, you know, I am a Bitcoiner and here's why. So walk me through your thought process. And for anyone watching the show, just make sure to check it out. I think you have it posted on your profile. It just shows up there. So check it out, Jad Comair. Tell me a little bit about this series, Jad.
Yeah, basically, when we launched our ETF, I was running a hedge fund, and we had like 0 retail customers, and we had to get our voice heard and our brand known. We didn't even have a website back then. Now, now we sorted with all the social media presence and so on. So this is where I grabbed the opportunity to share like my story, because I believe that I have a story that is not like only theoretical, like about like how Bitcoin can help a better world and so on, but sharing like how during my from my dual citizenship, from my work in finance, from my knowledge of the markets, and my also curious aspect of looking at a lot of things. So in this series, I talk about art, I talk about genomics, about terrorism, I talk about like so many aspects that I have experienced myself, and explaining how and why I became a Bitcoiner. It is also like it was also a way to show people that haven't experienced certain stuff. Like they say that God created Lebanon, and it was too beautiful that other countries complained. So to be fair, God created Lebanese politicians, and and we know that we have corrupt politicians, which has nothing to do with what Europeans see. But people don't realize how the root, basically, of the problem of corruption in general is money. It is money that is allowing, and the whole financial system, like people putting their money in the bank, and then the bank buying treasury bills from the government, and the politicians getting to places in the government where they can spend this money to benefit themselves and their relatives and so on. This whole setup is designed to breed politicians. And if you're not in a if you wasn't raised in a corrupt country like I did, you wouldn't see it. You would think, I mean, the corruption is everywhere now, I see it, but it's very strong in Lebanon, but it's also everywhere, because at the end, it's not like politicians taking money for their own benefit, but for their but selling promises with future generations' money to get elected and get into power. So for me, it is still corruption, but in a disguised manner. So yeah, I created this series just to explain, like to show people like some use cases they haven't seen, because not everybody has a dual citizenship, and not everybody have seen corruption, terrorism, and so on, basically.
Yeah.
One of the
And
things, for example, that I addressed in the series is terrorism financing, because that was the first thing that Bitcoin was accused of. And in Lebanon, we have a terrorism organization, or at least terrorism declared terrorization according to the US and the EU, which is Hezbollah. And I saw how the traditional financial market and the traditional routes are the main factors, and how Bitcoin can be used to fight terrorism instead of because of its traceability and so on. So they were accusing Bitcoin of stuff that were not at all true, and ignoring the elephant in the room that was that the traditional financial system is the best terrorism financing mechanism.
100%. And, you know, cash is where all the financing happens, and shell companies. I mean, there's so many ways to, you know, leverage the current system for really bad things. But yeah, I think that series is fantastic, and it's quite personal, which is, I guess, really relatable, especially for myself coming from Lebanon. But I'm curious. So when you came out to the world, your family, your friends, your relatives, that, you know, you are a Bitcoiner, your network, did you get some weird messages like, what are you doing, bro? What's wrong?
I mean, obviously, you can be a Bitcoiner, but remaining silent. It's quite particular about the shift. It was a very public shift, and a very shift in direction in business. This brought me a lot of eyebrows raised of what is he doing, or what. And most of the time it starts negative. I would say until 2025 it was mainly negative eyebrows, like, okay, he was not able to run a hedge fund successfully, which is not the case. So he's trying into crypto, or he's a scammer, or like all kind of negativity that can lead to that. But now, like, when they see that where Bitcoin performance has been, so first of all they said, shit, I should have listened to this guy when he went out. And second, when they see also the massive Bitcoin adoption all across the world, and the headlines are just proving us Bitcoiners right every single day. So for me, I'm more like my eyebrows are raised about the remaining resistance. Like, honestly, what more do you need to
Yeah.
become a Bitcoiner today? Like, you have the whole U.S. staff holding Bitcoin, and they're holding like hundreds of millions. Trump himself is holding billions. Strategic Bitcoin reserve on the national level. I mean, how dumb can you be not to still resisting it, basically?
It's quite.
And it's crazy. But I lived it before, because my first job, actually, before becoming a trader, was in 2000 as an internet consultant.
Yeah.
So my job was to go and see companies and convince them to build a website. And the discussions were the same, like, why would I need a website? Why is it for? Like, people can call me. I was explaining that in the future everybody will book their tickets online to this travel agent. I was like, why would they go online? They just call me and they book the ticket.
Yeah,
And
yeah.
it took like, on paper it was like already there, because 2000, like, everybody was excited about internet and so on. But it took like years for people to become like internet native and so on. And it takes time, unfortunately, like any technological advancement, for people to adopt it and to change paradigm. It's not something that you do with a flip of a finger.
Yeah, and I mean, as Bitcoiners, we're okay with that because we're used to a low time preference. I mean, we can wait. It's just sad for, you know, our inner circle to not participate in what we believe is going to happen. But I feel you. I mean, when I transitioned from TradFi to Bitcoin, I raised a lot of eyebrows. People ask a lot of questions. I had to go public on LinkedIn and on Twitter. And at least, you know, I had the years to kind of convince, for example, my parents. My dad is a Bitcoiner, so is my mom. So I had to work on that just to make sure the transition was smooth. But let's jump into the meat of it. So you are now, and correct if I'm mistaken, the first regulated private Bitcoin treasury company in Europe.
Yes, basically, what we have seen with Bitcoin, um, it's there's the asset itself, so Bitcoin per se, and then having a Bitcoin equities ETF, I was able to observe everything that was done around Bitcoin by publicly listed companies. So our ETF initially had a lot of miners, for example. And we realized that Bitcoin mining is not a very interesting business. It's very competitive, very tough. And we have seen a lot of them shifting from Bitcoin mining to AI. We also saw like exchanges like Coinbase or asset managers like Galaxy, or like we looked at all type of business models. And one business model that stood out is Bitcoin Treasury companies, and the main is MicroStrategy with Strategy Now with Michael Saylor, that was able not only to compete with Bitcoin, because our ETF was trying to track Bitcoin by selecting companies that are the most sensitive to it. But a lot of them, although they were very sensitive to Bitcoin, underperformed it. And the only one who massively overperformed it was, and over a long period of time, was Strategy. And his business model, I believe, is a very, very interesting business model, as he's able to use financial engineering to generate performance on top of Bitcoin. So with the Bitcoin world, you need you have a new benchmark. Your benchmark is not anymore ECB's interest rates or the S&P 500. The benchmark is Bitcoin, and that's how we look at things at Melanion Capital, at least after discovering Bitcoin. Like whatever we're doing, we need to beat Bitcoin. And MicroStrategy's model was able to beat Bitcoin through his financial engineering, which brought us to the realization that that's what every company should do. And that's what happened basically the past 2 years, I would say. You have seen like a lot of listed Bitcoin companies transformed into Bitcoin treasury companies. And so you had MetaPlanet in the US, Capital B in France, Smart Web Company in the UK, H100 in Scandinavia, and a lot of projects launched similarly in the US. And now they're like every day you have a news flow about one company becoming a Bitcoin treasury company.
I do
And
have, Jacques.
so what we're doing, so what we have realized, looking at all these listed companies, is that this is a trend that is going to continue. It is unstoppable, but it hasn't reached yet the private sector. And so what we have come up with is a way to build the same type of business, a Bitcoin treasury company, but in a private company. And we believe that we have built a playbook that we are executing, that any private Bitcoin company, any private company can execute it with the flexibility, the pros and cons of being private. That you have maybe less liquidity but more flexibility. And what's interesting is that the private equity market, especially in Europe, is much, much bigger than the public equity market. And you have also across the globe a huge amount of private equities that is not invested in Bitcoin, and private Bitcoin companies can go and address this market that is today completely untapped.
Yeah. I do have a question for you, because you're knee deep into BTC treasury companies. I mean, your company now is one of them. So there are a lot of, opposing views, because you mentioned all companies will become this. However, Would it be suitable to say all companies or only companies that are generating free cash flow should sweep that into, because financial engineering at the end of the day, outside of generating value to shareholders and even depending on how you raise the capital that could affect your existing shareholders, I'm just worried because I'm seeing patterns similar to the dot-com bubble or the blockchain craze. So .com, every company in the world became an internet company. During the 2017 cycle, every company in the world became a blockchain company. And usually it creates this bubble environment because not all companies are actually building value with whatever they say they've become. And with Bitcoin, don't you think that if too many players are looking to do financial engineering, wouldn't there be competing companies for capital? I mean, in a downturn when liquidity dries up, what happens? So you're the pro here. I'm just basically sharing some of the views, some of the things I've heard. I'd love to get your ideas on that and your views on this trend.
Yeah, I mean, if you look at MicroStrategy's share price performance, although it massively overperformed Bitcoin since they adopted a Bitcoin Treasury policy, you had like periods where it was like trading to the roof and periods where it was trading to the bottom. So the excitement and the bull phases and the bear phases, there will be always cycles. The same way as we have cycles on Bitcoin, you're going to see cycles on Bitcoin Treasury companies. So the real differentiator is not like whether it's a hype or not. Or maybe now it's a hype, maybe it's not. Contrary to the dot-com era, you're building on top of an asset that is going to infinity. So the real risk basically is an execution risk. So are they raising capital? And do they have a light setup to allow them to manage the downturns and profit from the upturns? So the main thing you should look at while looking at these private Bitcoin companies is their capacity of executing the plan and the team's commitment to executing it and their knowledge to do it. Then you have the capacity to raise capital. So not everybody is equal. But this is not it's not a limitation per se, because your capital, you can raise billions or you can raise millions, but you should raise money to buy Bitcoin. Unless you have like burning cash flow and a failing business, which is the case in some of the listed Bitcoin treasury companies. If you have, even if you don't have a cash flow, and you are able to raise money, you should do it. The way I see it for Melanion Capital is a very good illustration of how things work. So we have a profitable business, the asset management business, and we can raise money to buy Bitcoin. And I know that even if I have a very good management of the company and very strong incentivization for all my teams, the profits or the P&L I'm gonna make on Melanion Capital as a business will not beat Bitcoin performance.
Yes.
So because the Bitcoin performance is so strong, it's such a high benchmark, and our funds objective is to beat it. But as a company, after paying all the costs and so on, we can make money, but beating the performance of Bitcoin is very hard. And whatever business you're running today in the world, if you look at the 5-year CAGR of Bitcoin, varies between 30 historically to 170%. So what kind of business, how profitable should be your business to generate this kind of CAGR over 5 years? Very few businesses are able to do it. So raising capital to buy Bitcoin, you're just putting an engine that is very strong on your old car, basically. This can only be beneficial. And then the financial engineering, we're giving the playbook to how to structure it, because we have a financial engineering background, and it's not rocket science, but it works basically.
Yeah. Do you plan on pulling a Michael Saylor and releasing the Melanion Capital playbook to the public?
Our approach is a bit different. So we deal mainly with CEOs, high net worth individuals, family offices. So this is our core target, I would say. So we're a bit more quiet than Michael Saylor, which is more like addressed to retail. This is more like the private banking type of playbook that we can give to our customers or to our investors to help them deploy it.
Amazing. Well, I wish you guys the best. I mean, it's good to see Europe awaken, at least, with you guys pulling the trigger and being the first to make this happen. I mean,
Thank you.
You can't let the US take all the clout. You got to help Europe catch up just a little bit. I mean, in India, they have Jet King, which is stock prices through the roof because they adopted Bitcoin. I mean, they're also an emerging market. You guys are a developed market, so you should. But Jad, thank you so much for sharing your playbook. We're at the final mark. Where can people find you? Where can people learn about your company, about what you're doing to stay up to date and, reach out to you if they ever want to have a conversation about your company, your products, and your services?
Yeah, so like you mentioned, personally, I'm on LinkedIn and recently started on Twitter. So Jad Comair on both, and Melanion.com is our website where you find everything.
Amazing. Jad, it was a pleasure talking to you and learning about what you are doing and having to deal with in Europe. But I mean, you don't look like a quitter. You keep pushing and you keep innovating. So good on you. And we wish you the best here.
Thank you. Thank you for having me.